We're TTB, the Alcohol and Tobacco Tax and Trade Bureau.
Welcome to part 3 of TTB's Boot Camp for Brewers webinar series. In this part, we will be covering taxes, returns, and operational reports. I'm Amanda Frazier, Section Chief from TTB's Office of Permitting and Taxation. Before we jump in, I'll pause a few moments to allow you to read our disclaimer. This disclaimer basically tells you we're not here to establish any new guidance today or set forth any policy. If I happen to say something incorrectly or that is contrary to the laws and regulations administered by TTB, it is the laws and regulations that supersede anything I tell you today. In addition, if this presentation is on our website for a length of time, you might want to watch it again. There is a chance that any information I'm sharing with you could be superseded and become outdated. So always consult the most recent regulations. In this session, we will cover what you need to know about federal beer excise taxes, including the importance of good record keeping, calculating how much you owe, filing your tax returns, and completing brewery operational reports. Using ttb.gov, so our website, ttb.gov, has a plethora of information on it, including information on taxes, the tax rates, the due dates under the tax filing, and the section under what we do. Also on our website, there is a page dedicated to beer resources. The site listed here in the slide, you can access it from our homepage by selecting beer under TTB regulated industries. Included our beer resources page are links to the beer laws and regulations. Beer regulations can be found in the 27th CFR Part 25 linked here. As brewers, you should become familiar with this section of Code of Federal Regulations. The Craft Brewer Modernization Act, or CBMA, provisions of the United States Internal Revenue Code provide for reduced rates of tax credits for beer, wine, and distilled spirits produced in or imported into the United States. Beginning January 1st, 2023, administration of the CBMA tax benefits for imported alcohol transferred from Customs to Border Protection to TTB. So the following CBMA permissions related to beer were made permanent in December 2020. CBMA reduces tax rates in effect since 2028. Please note that this allows the transfers of beer and bond between breweries of different ownership. However, in order to take the lower tax rate, you must have produced the beer and removed it. So let's go ahead and talk about record keeping. We will start with covering record keeping basics. Your record keeping requirements as a brewery include maintain daily records that capture brewery operations, enter required daily transactions by the close of the next business day, maintain records at the brewery and make them available at the brewery, and to retain required records for 3 years. If certain requirements are met, electronic records may be retained on the equipment located off of the brewery premise. And at the bottom, you will see the CFRs that make reference to this. As mentioned in the previous slide, your first record keeping requirement as a brewer is to maintain daily records capturing brewery operations. The most frequently used records by brewers are listed on this slide and include raw materials received, those used for beer production, beer produced by fermentation, beer transferred to and from the packing, bottling, or racking, beer packaged, bottled, and or racked, beer removed for consumption or sale, which is beer transferred to serve, tax-determined tanks, or packaged, or transferred to a cooler or tax-paid storage, beer returned to the brewery, beer lost due to breakage, theft, or destroyed. Certain daily records need to be summarized each day. These include beer packaged, bottled, and/or racked, beer removed for consumption or sale, beer returned to the brewery from which removed, beer returned after removal from another brewery owned by the same brewer, beer materials, beer in progress, and finished beer on hand. Please note, you may want to maintain daily summary records on the associated daily records. In addition to daily record keeping, brewers are required to take physical inventory every month and may be taken within 7 days of the end of the month. This inventory must include date taken, quantity of beer on hand, losses, gains, or shortages, signature under penalty of perjury. In the next few slides, I'm going to cover the common issues we see with record keeping, starting with the differences between loss and shortage. One of the common issues we see with reporting and taxes is not understanding the difference between the two. A loss is defined as beer that is lost due to a known event. For an example, a breakage, a spillage, or theft. Losses are not taxed. A shortage is defined as an unexpected missing quantity of beer that is disclosed by physical inventory count. Shortages may be taxed. As a brewer, you must submit the claim and provide the plausible explanation for the shortage, identify and address the defects or tax that may be assessed. Another issue we see is recording of beer destruction. First, I'm going to cover destructions on brewery premise. Destructions completed on brewery premise for beer that is not tax paid or tax determined does not require prior notice or reporting. Destructions completed on brewery premise for beer that is tax paid or determined does require reporting. A destruction record may be prepared and the brewer may file a claim for credit of taxes paid. This situation occurs when tax paid or tax determined beer is at a tavern on the brewery premise. For destructions off brewery premise, you must submit a notice of intent of destruction on the brewery letterhead and fax it to the NRC. The fax number is 202-453-2979. For credit on taxes paid within 6 months, you can show as an adjustment on the tax return, or you can file a claim. The last issue I'm going to cover on records is the recording of returns. For beer that is removed from or returned to the same brewery, you will take an offset against the day's removals. For beer that is removed from or returned to a different brewery under the same ownership, you may file a claim for refund of tax or make a decreasing adjustment on the tax return, but you may not take an offset. Now that we've covered records, let's jump into discussing operational reports. To start, barrels are a standard unit of measurement of tax and reporting for purposes of beer. 1 barrel is equivalent to 31 gallons. This slide shows where to find information for computing taxable removals of kegs and bottles and cans. These tables can be found in 27 CFR 25.156 and 25.58. For other sizes, you will need to notify the NRC in advance to request the fractional barrel equivalents. Let's go over an example. You will see the barrel equivalent factor at the top of the slide and how to compute the tax. You must compute to 5 decimal points on the removal records. The sum of the quantities computed for any one day will be rounded to 2 decimal points, and the tax will be calculated and paid on the rounded sum. So the barrel equivalent factor for 2412 is 0.07258 per the 25.158. So what does this mean? This means we have 24-ounce bottles. We have 12 bottles per case. If we have 75 cases removed at 0.17258, that is 5.4435 beer barrels. So we'll use 5.44 beer barrels to compute the tax. Operational reports are due the 15th day following the close of the reporting period. You can file quarterly if your tax liability did not exceed $50,000 in a prior calendar year and you reasonably expect to be liable for $50,000 or less in the current calendar year. Otherwise, you need to file monthly. There is not an annual filing option for operation reports. Please note, this is important and you must file a report even if there isn't any activity during that period. This slide provides the links to our operational reports. TTB Form 5130.26 SM is the quarterly Brewers Report of Operations, and TTB Form 5130.9 is the Brewers Report of Operations. Also, at the bottom of this slide are the links to instructions for completing both of these forms. On the next few slides, I will briefly show both of these forms. On this slide, you see part 1 of the quarterly Brewers Report of Operations, which is your beer summary. On this slide is part 2 of the quarterly Brewers Report of Operation, which is your cereal beverage summary. This slide shows part 1 of the Brewers Report of Operations. It is like the quarterly report and is your beer summary. This slide is the continuation of part 1, which is your removals for your inventory. Let's talk about common issues with operational reports. Common issues we see with operational reports include failing to start filing the TTB Form 5130.9 monthly when your taxes for the year go over $50,000. Counting beer that has already been tax paid or removed, so example would be sold in a tap room or used in a brew pub, in the on-hand beginning and the end of period figures, and entering your own permits online ID number instead of your brewer's number. Please note that brewer's numbers always start with BR and can be found on your brewer's notice. Another common issue we see is the wrong address being used in your operation reports. They need to be mailed to this address. So NRC or National Revenue Center, TTB 550 Main Street, Suite 8002, Cincinnati, Ohio 45202-5215. The last topic we're going to talk about is covering your tax return. You may be wondering about the source of beer liability. It is established by Congress in the Internal Revenue Code. A tax is hereby imposed on all beer brewed or produced and removed for consumption or sale within the United States or imported into the United States. The IRC also sets forth the specific tax rates for beer as described on the next slide. To start, I'm going to show you the TTB Form 5000.24 SM, which is the excise tax return. Please make sure all of your information at the top is accurate. The bottom of this form is where you will enter the amounts for tax purposes. And this slide shows Schedule A of the tax return, which is where you enter increasing or decreasing adjustments. On this slide, we have our current tax rates for beer. For beer produced and removed by a domestic brewer who produces 2 million barrels or less per calendar year, the tax rate would be $3.50 per barrel up to 60,000 barrels. After the 60,000 barrels, but less than 2 million, the rate would be $16. For beer removed by domestic brewer who produces over 2 million barrels per calendar year and who produced the beer or and electing U.S. importer with the reduced rate appropriately assigned to them by a foreign brewer, the rate for the first 6 million barrels is $16. At the bottom of this chart, you will see the general tax rate of $18 per barrel for beer removed by a domestic brewer who did not produce the beer. A U.S. importer who is not assigned the reduced rate by a foreign brewer, or a brewer who has exhausted its own reduced rate entitlement for the calendar year, or an importer who has already taken advantage of the assigned reduced rates. Please note, these charts can be found on our website under taxes and filing area I mentioned earlier, or by entering TTB tax rates in your favorite search engine. So we've covered the tax return and defined tax liability. Now let's discuss filing frequency. There are 3 filing frequencies available: annually, quarterly, and semi-monthly. I will cover each of these and the filing criteria. You may file 1 return per year or file annually if you reasonably expect to be liable for $1,000 or less of tax on beer on the current calendar year, and were liable for $1,000 or less in such taxes in the preceding calendar year. At $3.50 a barrel, you can produce up to 285.71 barrels at the previous year and current year. Please note, additional rules may apply to controlled groups and multiple breweries with the same employer identification number. You may file quarterly if you reasonably expect to be liable for $50,000 or less in tax on beer in the current calendar year, and were liable for $50,000 or less in such taxes in the preceding calendar year. For reporting quarters, end of March, June, September, and December. Please note, additional rules may apply to controlled groups and multiple breweries with the same EIN. The last is semi-monthly. You must file tax return 2 times a month if you expect to be liable for more than $50,000 in beer tax in the current calendar year and paid more than $50,000 in beer tax in the prior calendar year. The return periods for semi-monthly filers are the 1st through the 15th, the 16th through the end of the month. September does have 3 return filing periods. Tax returns and payments, if any, are due on the 14th day after the close of the tax period. If the due date falls on a weekend or legal holiday, the due date is the immediate preceding business day. For example, the due date for the 3rd quarter this year that ended on September the 30th would have been October 14th, which is a Saturday. Therefore, the due date was October the 13th. This seems like a lot to remember, but no worries. Due date schedules for each year are available on our website at the link on this slide. Also on this page, you can sign up for automated tax reminders so you never miss a due date. It's important to note, you must file a return even if there are 0 taxes due. Like the note I made earlier for operational reports being required even if there isn't any activity, a return is due even if you don't owe anything. Now you might be wondering, how do I use my operational reports to help me complete my tax return? We're going to walk through how to calculate your taxes. On this slide, we have an example of a quarterly brewer's report of operation. In box 4 of this form, you see 200 barrels returned to the brewery after removal from the brewery, and 2,100 barrels in box 10 for beer removed for consumption or sale, including beer removed, tax determined for consumption or sale in a tavern on brewery premise. Taking the 2 numbers we called out on the previous slide, we now have an example of a reconciliation of tax returns to report of operations. The 2,100 barrels would be calculated at the $3.50 tax rate, which would then be offset by 200 barrels returned to the brewery at the same $3.50 rate, making the total tax owed $6,650. If we're going to stay with this example, you now enter the $6,650 tax owed on your excise tax return for the amount of the payment. You can see that in box 3. In addition to calculating and paying the correct amount of tax owed, it's also important to sign and include your title on the tax return form, and that the person signing the form has the authority on file with TTB. Lastly, a Schedule A of the excise tax return is used for increasing and decreasing adjustments. We strongly encourage you to file your tax return and operational reports electronically through pay.gov. You can also pay your taxes at pay.gov. This platform is not only secure, fast, and free, but it also checks your entries and totals for accuracy. For more information on how to enroll, you can visit the link on this slide. If you're filing by mail, again, we strongly encourage electronic. Be sure to use the correct address, which is displayed at the bottom of this slide. The late returns or payments are subject to penalties and interest. Do not mail returns and payments to the National Revenue Center in Cincinnati, Ohio. The correct address for returns and payments is TTB, Excise Tax, P.O. Box 790353, St. Louis, Missouri 63179-0353. The most common issue we see with tax returns is returns not filed on time. Returns should be filed semi-monthly, quarterly, or annually. Monthly filing is not an authorized filing frequency for tax returns. Other issues include entering the incorrect removal date. It should be the date the product is tax determined, and the person signing the return not having signing authority with TTB. Finally, you can use our online submission process to file and receive payment for claims. The link to submit a claim can be found on this slide. To avoid issues, make sure to upload a signed copy of the claim and to upload all supporting documents with the claim form. This slide contains links to our valuable beer resources in our website. The presentation will be available under our presentations page on ttb.gov, so you can reference these links in the future. If you have further questions or need assistance, you can contact the National Revenue Center at the number at this slide, or by using the contact form on our website. Thank you very much for joining us today. If you would give us 5 or more minutes of your time to complete our survey and let us know how we did and ways we can improve in the future, it would be greatly appreciated. Again, thank you.
Visit TTB's official YouTube channel at USTTB.gov for more TTB-related content. And remember to click subscribe so you'll always know when we upload new videos.